CME Group FedWatch interest rate futures suggest we're probably going to get a 75 basis point rate hike from the Fed tomorrow at 2 p.m. Eastern time. That will be the third consecutive increase of 75 basis points, and will take the Fed funds rate into the mid 2% range. Now, ultimately, what's going to be more important for market projection is what Chairman Jerome Powell has to say about interest rate hikes between now and the end of the year. The terminal Fed funds rate, the point at which the Fed will stop raising rates and therefore look at the impact they're having on the broader economy, is now rising to about 4.5%. And that suggests steeper rate hikes between now and early February. Will that be too much in terms of choking off broader economic growth? And will it be enough to tame the inflation that is much hotter than expected and hovering around the fastest rates we've seen in a little bit more than 4 decades? Ultimately, interest rate hikes are going to have a trickle-down effect to not only the American economy, but to the American consumer as well. It's going to, of course, trigger increases in credit card interest rates, in mortgage rates, and in borrowing rates across the curve, across the whole of the consumer-driven economy. And that is incredibly important here in the United States because the consumer drives about 2/3 of GDP growth in any particular quarter. I'm probably going to be most focused on the impact it will have on the bank lending and mortgage market, however, because 30-year mortgage rates tend to take their cues from 10-year bond yields, and 10-year bond yields tend to take their cue from the Fed interest rate increases. Now, we're already nudging up to the highest level since 2011 on 10-year Treasury bond yields, and that, of course, has lifted mortgage rates to the highest we've seen in about 10 to 12 years, in point of fact. So we're probably going to see further increases there. And that, of course, indicates higher borrowing costs in terms of house purchases and outlays each month for those who have been lucky enough to buy a house in the recent months.